The key difference between the dot-com bubble about 2 decades ago and the current .ai rally is that this dot-com bubble, it was based on hope back then. Hope on a mass market adoption for online shopping. But this .ai rally that we're seeing here today, it is already a reality, and especially after the rollout of ChatGPT. And there is a similarity and also a difference between the two, and what is it? But before we discuss about this topic, please do take some time to read into the disclaimer. Now let's take a look at the history of dot-com bubble. And the online transaction between businesses globally began in 2005, and that's about here. And that's when Alipay and PayPal started their partnership for cross-border payments internationally for B2B transaction. But the real deal started in 2011 and onwards. It's about here, and you could see that how much it have grown. Now, what happened back then, it was Alibaba introduced its own online payment platform called Alipay, marking the beginning of mass market adoption for online shopping. But do take note of this, is that the hope for this online shopping, which is created this dot-com bubble, that it took a time of at least 11 years to come into reality. And for AI and tech rally that we're seeing here, and I personally believe that there is a long runway for it in many years to come. But make no mistake, this whole rally that we're seeing, even beyond 2020, this rally we're seeing here today is the flow over of the stimulus packages and all the easy money policy created over the years, or we can simply call it the debt bubble. Let me write this down because this is important to note. So again, all this rally, including this one, is because of the debt bubble. And I believe that investors are using .ai as another good reason for this rally, mostly taking advantage of the easy money policy. And it seems that that bubble rally may have just pricked this bubble that we're seeing that has just pricked at the start of 2020 22, with the beginning of higher inflation and higher interest rate till this date. And how can I tell that this is another bubble in the making? Now let's go back to Nasdaq again. Now we could see that the recent run, especially after the COVID pandemic, and now let's look at the characteristic of this rally here. And I'm not too sure you have seen this. And I want you to take note of the difference between the recent rally and the previous rally. Yes, you're right. It is much steeper than the previous. And this rally is into maturity, but this rally, I would say that is into euphoria. And that's how I identify that it is a bubble or it is a bullishness into a maturity. Now, whether it was dot-com crisis or the '08 crisis, which is 8 years from this dot-com bubble, but this time I believe that it maybe was still in the midst of a debt crisis, they all have a similar behavior before its crash. And this is most stocks are highly valued and forming this bubble. Now, this is .com, and if you're going to read into '08 crisis, you will have a similar reading. Now, this bubble forming most of the stock overvalue. And when the bubble prick, it will retrace and come to a point, the bubble will burst. Now, what we're seeing here is that the rally created is not just AI or .ai. The rally created we're seeing here is that it was because of the debt bubble. And the bubble has just pricked, which I believe, and now is forming a retracement. And what am I looking out for retracement right now is I'm looking for signal. Now let's take a look at what happened to last week closing. And this is a weekly chart. I'm looking at Nasdaq and all the major blue chip stocks in Nasdaq. And I make a very interesting observation here is that as of last week close, I'm seeing here as an inverted signal and also inverted signal for the rest of the major stocks, which I find that it is interesting. And this is what I call timing. And I'm watching it very closely. And I always use this trigger point, and this is what I call trigger point. Now, I always use this trigger point as a signal to consider to hedge or to stay light on my existing position or even to sell short. In the late 1990s, a firm could just put a word .com at the end of their company name and their stock would go up by 10% the next day. So buying into a .ai domain and claiming to be an AI company, it doesn't really make you an AI company. So as an investor, one of our jobs is to figure out who is real and who is not. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that I stayed through this tutorial. You have many great trading weeks ahead.